All right, so we made it to the end of September, the end of the quarter, end of the month, end of the quarter. We had a little bit of we continued this little rally we talked about in previous videos up towards that moving average, up towards some resistance. Now the question is, are we going to break through this level, or are we going to make a new leg lower? So I'm going to break down what if any resistance levels we see around here and see what the likelihood is, which one we expect to happen. Whether or not whether we're starting a new intermediate run now with this run, or whether this was just an oversold technical bounce, and that this period of volatility isn't quite over with. How bullish has this rally been? Because that's what it, to the degree of how bullish it is, tells us whether or not we're starting a new run or not. So I'm going to break that down today, and we're going to take a look at a trade idea that will give us a good hedge if and when we need it, and talk about why we picked the stock and the sector for it and how we're going to trade it. So let's go ahead and get started. Today is Wednesday, September the 30th, 2020. This is the market outlook from marketscholars.com. My name is David Settle. All right, well, let's go ahead and start off taking a look at the S&P 500 on the market forecast indicator. You can see we continued that move higher like we talked about on Monday and last Friday up to the moving average. We actually got above it briefly. This morning we had a green line or excuse me, a yellow line there for just a period of time before we closed down off the highs of the day. As a result, you notice the intermediate line still going up and it's still bullish, light green shading. It's the green line and dark green shading combination that does well, and of course more than just a day. We've seen you can come up and get it for like a day before you roll back over. The intermediate line's well below the market sentiment line, so until it crosses back above it, and again stays above it, gets up into the reversal zone, that's when we're going to feel good. And usually you get a good little cluster at the very beginning, like something like this over here. When you get up into the reversal zone, you get a good cluster. We came really close to one here, but that started us off. That was a good, strong rally. We got the dark green shading the green line. We're able to get going. We haven't really had that, we haven't had a pullback since until now. That's going to be an idea of when we get another pullback again going forward, is when the intermediate line crosses above market sentiment, we get above 80, and we hopefully within a few days or so get some kind of overbought cluster to really solidify the beginnings of a bullish intermediate run. I don't expect that to happen on this current rally. In fact, you can see that the near-term line did get up above the market sentiment line and got up above 80 before rolling back over now and is back down below. So we might be meeting up with some resistance at the old, see this 100% line, members, the old COVID high point here at the moving average. It looks like we might be meeting up with some resistance there. That's the level actually we talked about on Monday for other reasons as well. And we hit that on an intraday basis today on the last day of the quarter. So that brought the near-term line down. If you notice, I've compared this pullback to this May pullback time frame, and we've bounced up to the moving average, very similar to right there. And there's the potential for a move down now towards 31.35 into that 78% retracement level, and still actually stay above that blue line as we do come down. I expect the same kind of, even though I think the pullback looks like this, I think the recovery will not look like this. I think the recovery off the lows will look more like this, where we come down, go up, come down, go up, come down, go back up, come down, and then we finally get the dark green shading and the green line, and we get started on an intermediate run again. And you can see during this period of time, the near-term line did go up into the reversal zone, did get above market sentiment line, and came right back down after hitting resistance. Same thing here, came right back down. Same thing again, came right back down. An intermediate line eventually got up above 50, got up above the green line. Never did get a green line, dark green shading for more than a day. And then it rolled back over and got back below. A couple of times it got up above. Never did get dark green shading and a green line combination. So that's the expectation I have here for markets as we go into the election season. There's going to be ups and downs. Neither one of them are going to produce. We're not going to get a big downward move here. We're not going to get a new intermediate run started for at least a while. So now that we've had this short term, late month, end of the quarter rally up to the resistance level, up to the moving average, That seems like there's a pretty decent chance that that might be where it ends. And again, going back to the monthly candle here, I mentioned this on Monday, and I'll mention it again. So we expected Monday that we'd move up a little bit more, and then we get this long lower shadow. Well, we had a really decent long lower shadow earlier today when we were at the highs of the day. And when we get these long lower shadows, you can trade into the bottom end of the range, and that's kind of what I expect here in October, that we come down and trade in the range at that, if not a little bit lower, again down towards that 78. Had we closed at the low like we did in May, that would be a different story, but we didn't close at the low. We didn't close down towards this 78%. So that doesn't give us the opportunity for a nice strong bounce up. The momentum line did not end up falling into extreme lows. The near-term line is barely down below 80, so there's more room. As you can see here, this is the level that we had back there with that long lower shadow. So we still had a few more months to bring the near-term line down below 50, and I expect that to be the case again here, where we'll get a month or two potentially even past the November election until we finally get some clarity on its results before we get that near-term line below 50 and we're able to set up a low point there and turn it back around again. Because I do expect over the long-term bullishness, just not in the short term. As I mentioned to you before, when you look at the weekly chart here, it's setting up for this nice little it's setting up for a new bullish run to start. We're just barely starting it. The intermediate line just barely got up above 80. We're pulling back now on this little pullback, and I expect we'll get some more. We'll get a bearish near-term high point, and we'll come back down for a few more weeks along this blue line down to that 78% over the next so many weeks. And then we'll be up and down too, and maybe even dip down to the 38% on the intraday basis. As you can see, that's where the 30-week moving average is. And a lot of times when you break up above that 30-week and you get so far up above it like we did, it's not surprising to get a pullback back down to it before we can get going again for a longer run from here on forward. So I expect that to happen. You can see that all the Nasdaq's got the yellow line, and the near-term line it was a lot higher, and it's still above its market sentiment. Same thing with the Russell, but you can see the Russell hit the 78% retracement is acting as a resistance right now, along with that moving average, and of course, but its support down to the 62%, if not down to the 38, is there's not as much downside in these areas as there is, especially for the Nasdaq, which has quite a bit of room just to get down to its 38%, much less down towards its 50%, where the old pre-COVID high point is, and can act as a support level there around the 10,000 mark. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon right here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That will notify you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us that you liked our video today and that you want us to do another video again tomorrow. It's a quick way to give us feedback. If you like our videos, if you don't like our videos, of course, you don't have to click on anything. If you like our videos and you want to let us know, you can do it with one click right now while you're watching there. Also, while you're down there, comment. What did you get out of our videos today? What stood out to you? What questions or comments do you have? Post those in the comments below. Join our website at marketscholars.com. There's a link popping out right there at the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. There's my handle there at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching on our blog, you can check out some of the other things here on the right-hand column, including our Market Outlook live videos. I do a live video every day at 3:30 Eastern that I do the Market Outlook. We review all the old trade ideas that we put on in these videos. We continue to manage them until we close them. We talk about how to do that. And we also put on today's trade idea before the market closed. So check that out. All of our subscribers, our monthly and our premium subscribers, get access to that. We also added something new for our premium subscribers as trading rooms where you can register for all of our classes each month. All in one fell swoop. So you can click on our premium subscribers can click on this and get access to that. Remember, they also get access to our real-time trading alerts using Telegram. So that's a unique feature for our premium subscribers. But remember, all of our subscribers get access to all of our trading rooms and those Market Outlook live videos. If you come down here to the bottom, click on this heart. That opens up this new window. Hit that like button right there. Also click this thumbs up. Also opens up a new tab, takes you to your Facebook page. Click that like button, that thumbs up right there. Again, the more you do that, the more likely these posts will be seen by more than 136 people, as there's over 1,000 some odd people that view us. Same thing on Twitter. A lot more people will be able to see this post and what because it will be shown to all of our followers with the more engagements it has. It also benefits you because Twitter and Facebook promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us here. All right, let's go back to our charts and let's take a look at the weekly chart. And you notice the candle we're getting here. So far as of right now, we don't have a lower shadow. We opened up at the low point of the week. We are 3 days into it, so we got 2 more days. But the low is at 33.27. Right now we're trading at 33.63. So kind of keep that in mind in terms of, there's a pretty decent chance we'll get a lower shadow. I mean, we're not looking for, we're kind of looking at transition candles here at worst. At best, obviously, a nice strong bullish candle for a move higher, but you don't see that happening, right? There's more than likely we'll kind of reverse back down to some bearish candles. So we're going to keep an eye on that lower shadow. That development would be a lot more likely if we end up with some kind of transition candle with an upper and a lower shadow by the time this week is done. So that would mean potentially some weakness heading into the end of the week. Let's take a look at the rally from some of these other oscillators. You notice we did get above 0, we did get above 50, but that's it so far. So that kind of shows you the extent of the rally we're getting. It's not very strong. It's not a strong bullish move higher. We're basically getting up to some resistance from some oversold levels in the short term and bouncing back up, and that's it. You also see it too on the near term line. The negative directional index is still above 25. The positive is unable to get above 25. It's right there at 24.5. So obviously for us to be bullish again, the positive would need to get above 25, if not above 30, and the negative would need to get below 20. That's not happening. So there's a pretty decent chance that something like this, where we just make another pop up higher with the negative index not dropping below 25. Again, I see very similar patterns to that occurring. So there's May right there where we did dip below 25 briefly before the next leg higher, and the positive index did dip up above 20 but not above 25. And then of course over here during this rally, the negative index never did drop below 25 during this pullback, just briefly right there, and that was it. And the positive jumped up above 25 a couple of times, but then got right back down below 20. So similar type of patterns developing here, with these different oscillators kind of giving us an idea that this might be it. Like you can see we're up to the blue line, which is also going to be a little bit of a resistance for us as we have this, as we oscillate from a moderate to a weak bearish trend, and we're still kind of in the cloud. And then finally, from a Bollinger Band standpoint, we are now at the top of the value area, which is going to act as a resistance too. And there's a pretty decent volume node up there now. So you can kind of see what's really weighing on us. I mean, this is a pretty decent little rally to get to the moving average, but not strong enough of a rally to get into like the bullish territory of the Bollinger Band width. We did get out of the bearish territory down here, but we're kind of just neutral in this kind of neutral range. And we're not able to really get out above that value area there and break away from that point of control. When you're in the value area, the point of control will act as a center of gravity to pull it down. So you kind of get the idea that this may have been it. Like this again, end of month, end of quarter, last hurrah. That as of today, maybe even started the declines today on an intraday basis. We might touch up to this high point briefly tomorrow and trade up a little bullish there, but there's a pretty decent chance that we may, by the end of the week, have already started the next leg down. Again, not kind of following me. This has been a pretty slow, grindy move to the downside. So not we're not looking to fall off a cliff. We just expect the slow grinding move continue, especially with all this volume here. It's going to be hard to fall sharply. It's going to most likely be a continued slow grinding move as we follow this purple line down, the volatility cone here down to about that 78% Fibonacci retracement. All right, when you take a look at today's intraday moves, you can see we talked about on Monday that we would continue to rally up towards this 339, that volume node, the midpoint of the range. Well, we almost got there. Here we got about 338, a little bit above 338 there on an intraday basis before pulling back down to that volume, to that point of control. Pretty decent volume coming at the very end of the day. But that doesn't mean that we can't come back up potentially early tomorrow and kind of touch that spot. We're already up a little bit in the after hours, up to 336. But maybe even just a little bit more up to that 338, 339, hit that resistance. Kind of this, knee jerk, this end of the month, end of the quarter rally, but now starting a new month off before we roll back down. Of course, if you break through this 335 level, then you can see where your next layers of support are, especially down 325, especially if I take a look at a longer time frame here. You can see that 322 is where the next layer of support will be, down to, and it's just a little bit below the 23% retracements where the volume node is. And then below that, now we start testing that 78% retracement of the decline. If I were to zoom back out here a little bit, you can see what I'm talking about there. Let me get rid of this one here. Sorry, this one. Remove that drawing, and I'm going to put on the 78% Fibonacci retracement level here. So there it is, right at that volume node right there. But if I go back to that 90-day chart as I was showing you with the 30-minute here, there's that 78% retracement level right at that volume node. And of course, the 38% at that next volume node, and that's the bottom of the value area for this 90 days. So again, kind of hard for it to do a free fall to the downside when you've got multiple layers of support. Boom, 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 down here to the downside. If you take a look at today's volume and trading range, you can see here, let's see, we're over here on the market. Well, no, excuse me, it's 3 green arrow chart. You can see the volume really kicked up above the average. 2 green arrows, not getting the third one. And the range here looks like it was smaller than average, but in reality, the futures contract, you'll notice yesterday's range over here, so next to the R right there, yesterday's range was 92 points, almost 93 points, so well above the average for ES at 71 points. So when you include the overnight craziness during the debates, then we had a pretty decent range. It just settled down by the time the market opened here today, but that late little push produced a lot of volume. If you take a look at the volume and the trading range, you can see, especially let me give you some context on this. Right now, the volume is sitting at pretty decently high levels. That May 2019 level I talked about before that we compared this to back there, this August level as well. A little bit of a pullback there in September or October, September into October. You can see we had some much bigger declines in volumes at these levels, very similar to what we saw here. I expect that this is probably about as, again, if we continue to pull down into this spot, there won't be a big jump in volume. There won't be this big volatility surge. Volatility will most likely work its way up towards the neutral zone and through it rather than one big pop. But you can see volatility remains very high. The VIX still in the mid-20s, even though we're at extreme lows here. And we were over here too. You can see we had been jumping up in volatility, and the VIX was at extreme lows there in the mid-20s. And that was right before we did pop up to the neutral zone, to the bottom of the neutral zone there. So you can kind of see we might be setting up for that type of volatility again, that we know that once you get to the 95-100% mark, then you're pretty much mostly done with the surge. Now it's just a matter of shaking through the ups and the downs until we eventually start working our way back down into the neutral zone and back through it and starting a new bullish trend. So that won't happen again until you get that ATR back down below 1%. So, expect some days, and 1% is three and a third point. So expect some days of 6-point moves, 5-point moves, which is perfectly fine. If we start getting like 10-point moves or 11-point moves, that's a different story. And that's, as you can see here, we've had the biggest parts of the declines. We wouldn't expect those bigger moves. Maybe some 1, maybe up to 2% moves up and down. But that's it. We haven't had any significant gaps one way or the other. And historical volatility has actually stayed down below implied volatility, even without a spike in implied volatility. Expect that once we do start to make our runs up and down, for volatility to work its way eventually back below historical, and that's when we know that there's a good chance the new intermediate run has started. Again, that might not happen for another month or two once we get through the election and any kind of election results that come out of that, as well as the coronavirus and other factors that could be playing into the volatility over the next couple of fiscal stimulus bill as well that could be playing into this next month or two. All right, so quick little technical summary of the charts. We've had a nice little short-term rally up to resistance, up to the moving average. I don't expect anything more than that. Maybe a little early strength here as early as tomorrow morning, but nothing more long-lasting than that. I expect more of a leg lower now. Again, not falling off the cliff, not significant moves. It's going to be more of what we've seen in September, this grinding action to the downside as we work our way to the, in this case where the volatility may get to its worst levels at the lowest point of the pullback. Instead of at the beginning, it's going to be more towards the end. But again, expect more ups and downs. After the next leg lower, there's going to be another leg higher, back up towards that falling moving average again. And we'll continue that process until we finally get some clarity on what to expect going forward from this November. So what do you think? Do you agree with that technical assessment? Do you disagree? Comment down below, especially if you disagree, as to why. What charts or indicators are you seeing that suggest why you're a lot more bullish or a lot more bearish than I am? All right, now let's take a look at what's driving the price action here this week. You can see the strength in the risk-on move that we've had so far, with emerging markets and small cap stocks and in QQQ all leading the way, all outpacing SPY. Gold was up. It's a function of the dollar being down as much as it is this week. Long-term bonds are also down this week. Another sign of this risk-on move that we're going through here. If you take a look at some of these charts, especially that dollar's made quite the move here this week to the upside. But again, only getting up towards its moving average. It was actually a lot lower than its moving average, and potentially now rolling back down, or maybe a little bit more upside. But like the broader market, that's what's really driving this, is the dollar's strength and weakness is what's driving a lot of this bullishness. So if we start to lose on a lot of that bullishness, then you can see. I mean, look at that catch-up trade that happened in early June, that peaked there in early June, and we started to get that decline there. And then, of course, this last little rally that we had all the way up until early September, all fueled by weakness in the dollar. And now this little pullback, this intermediate pullback in September, is fueled by strength in the dollar. This is the euro US dollar pair. So we're looking at the euro. So the inverse of this would be the dollar. And, of course, the other aspect, too, is bonds. Look at the 10-year note here, and you can see today yields really took off to the upside today. The intermediate line dropped down to its market sentiment, and both short-term sentiment lines bounced back up. So there's an opportunity for some renewed strength in yields, and of course, that would also be a reflection of rising inflation expectations, which would also be bearish for the dollar and bullish for stocks in the long term. Even if we do get some volatility in the short term, it would be very, very good for bonds to start working their way. As you can see, TLT is still at high ends relative. Even if I go back to like a 5-year chart on this, it's still at a very, very high level. So you can see I mean, talk about little margin of safety. There is very little margin of safety for TLT all the way down to the bottom of its retracement zone, if not further into its value area. So very, very poor margin of safety, and it's just now a matter of this extremely low bandwidth. We get a breakout move either to the downside or to the upside for that matter, but more than likely going to be a breakout move down here to the downside. Might get a little bit of a fake out move first, but we want to keep an eye on TLT. A breakdown to the downside means rising yields, again, rising inflation expectations. Commodity prices will also be a reflection of weakness in the dollar. As you can see, we pull back down the support on commodities. There's still a lot of volume up above us and not very much down below us. We are still below the value area the last 5 years, so you can see how there's still room for us to make a run up to the upside here on commodities before you start meeting up with some resistance. Again, would be a reflection of weakness in the dollar. So, this theme of weakness in the dollar in the long term, in fact, if you take a look at FXC here, this is the ETF. In the long term, you can see where the strong support is on the ETF in the last 5 years. And once you do break out to the upside, very little volume resistance to the upside. So lots of opportunity for this pair to start making a move in the long term. Even if in the short term we don't make another run down towards this 108.5 area and retest some of this support during this intermediate pullback. And when we do that, a lot of people will be saying, oh, here we go, and we're getting, the dollar's going to be strong, and then we'll start to see some, where is it here? So they'll say, oh, the leadership's changing. Well, the leadership's not going to be changing. We might get a little bit of a decline to the 200-day moving average in this relative strength. But when you get these big pops in the RSI and big pop in the PPO, more than likely you'll get a new high that will be much lower, but the index the ratio itself will go up to a higher high. We saw that over here after this pop. We saw it over here at this pop. We got higher highs and higher highs there with lower highs on the PPO as well, and that led to some weakness, right? Weakness into that. So look for some short-term weakness, and there'll be some chatter about the dollar strengthening now and the leadership is changing to these value areas. No, it's not. It's just a pullback. It's just part of this process during this period of volatility until we get a new leg higher, the leadership regains a weakness and the dollar regains its momentum, and we get another leg higher here. That can last a while. That the next leg higher up to a lower high point, you can see it took over a year for that lower high to develop after that peak. And then on this one over here, it took a pretty decent, it took about a year for that next high to develop over here in 2012 coming off of 2011. So we can still get another year or two of another higher high forming here on the ratio with a lower high on these oscillators that will eventually develop into a real bear market where the ratio breaks down. When the ratio breaks down, it's not going to be leadership changing. It's going to be the fact that everything is breaking down because we've pulled everything forward in the tech spending area. Once we kind of run out, then there won't be any tech spending for the next year or two because we've pulled it all forward to get this 5G work from home thing accomplished. And like I said, there may still be another year of that to come before we get that steady decline where the tech space, which is now which was the big dominant part of the S&P back then, lost its dominance to the financial sector by the time we finished that bear market. And I don't know if it'll lose it to the financial sector this go around, but you would expect it to lose it to some other sector in the S&P. As crazy as it seems, we never thought in 2000 that the tech sector would lose. The internet was new. We never thought it would lose its strength, its mantle, its leadership mantle in the markets, but it did. And then financials took it over, and it lost its mantle. Then energy briefly took it over, and it lost its mantle. And now technology is retaking it over this last so many years, and eventually it will lose that mantle too, because that's how things work. It just might not be for a while, from a long-term perspective. All right, when we take a look at the sector rotations, you can see, again, financials are strong, technology and consumer discretionary are strong. Materials is up there. Industrials and energy have been down. It's kind of a mixed bag because look at industrials and energy. They led off the strength. Then they fell off. But financials were able to hold ground. Technology picked it up, but not really communication services, which is the other big chunk of that space with Facebook and Google and Netflix and Disney involved in there. So we're kind of getting a mixed bag. Again, no clear real leadership, which again kind of nullifies this little pullback that we've had since, when would that be? Right about, it looks like the 24th. So if I were to go to the 24th here, over this past week or so, a little bit more than a week, technology is our gainer, but look at real estate and utilities are up too during this rally. Not your typical leadership during a rally, so it kind of puts into question how bullish this rally has been. And you would expect those to hold up while technology pulls back down to where these other cyclical areas are, which is why they serve to be pretty decent opportunities for hedges in those spaces. All right, so with that in mind, our trade idea of the day is on one of those types of stocks, and that is on Twilio. Twilio's had its own little run up to the moving average. Its intermediate line has run up towards the midpoint, still below the market sentiment line. You can also see too that it's gone up to this volume node as a resistance level, and there's not very much support down to 195, if not even through that. If that doesn't hold in the Fibonacci retracement zone, you can easily get down. So not very good margin of safety for a stock like this, and a lot of stocks that are in this tech space as examples that we've been using in the past, like on Apple and on Nvidia in these videos for hedges, and the same thing would apply here. You can see from some of these other oscillators, try to see how bullish we've gotten. We were converging on these moving averages, but you see the histogram's already rolling over. We can't quite get above the 30-day moving average very strongly. The RSI and the CCI did not get up to strong bullish levels on either one of these. The DMI also doesn't show very much strength. In fact, the positive could barely get above 25. The negative is setting up for a bounce from these low levels below 20, which would mean a move to the downside here. So, how do we trade a stock, a move to the downside like that? Well, if we take a look at Twilio and we take a look at setting up a long put vertical spread on Twilio, we're going to sell the 200, buy the 210, right around that 20 delta there. You can see the setup for that puts us into about 3/4 of a normal risk, because we do have to worry about earnings by November expiration. But it's going to be pretty. If we break out to the upside, it's going to be very easy to keep our risk smaller than our maximum loss if this max gain pops out of that window. Otherwise, for a few $100 of risk, by the time we would get out of it, if it did pop up, we're getting over $2,000 of reward of a hedge if we work our way down to that 190, 195 area, down to 200. So it kind of gives you an idea of how far things can drop down to the downside. So again, it's a hedge trade in that space. We got a lot of bullish trades that we've been talking about in recent videos. This gives me an opportunity to add some negative deltas to that portfolio. All right, so that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That opens up a new, takes you to our Market Outlook forums where you can open up any new thread, reply to anybody else's thread, and let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on our video down below. Follow me on Twitter for more content in between the videos. Join our Facebook group as well as our website at marketscholars.com. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.